So first of all, Anupam, it is a great pleasure to have you here. I have been very excited to have this chat with you, and I know the rest of Let's Venture has been super excited to have you here. You are a mega star, and you need no introduction, but still for the benefit of our audience, as we all know, Anupam is a super angel. He is also a highly accomplished entrepreneur and has been a successful entrepreneur long before we started on this startup boom in India. And you have been making so much news lately about, given you a recent interview and what your portfolio is looking like. We're going to go into more details later. But really, thank you. Would be great to get started with a few notes on your journey, first as an entrepreneur and then as an investor, and then I'll keep it going from there.
Okay, sure. Thank you, Shruti, and thank you, Let's Venture. Great to be here. Hi, everyone. I should caveat that I love Let's Venture, and not only am I an investor, I'm on the board. So whatever I say is totally objective, okay? But no, seriously, I think Let's Venture is doing a remarkable job, and it's just amazing how over the years I've seen it develop in terms of bringing investors and opening up a whole new set of investors to this asset class. And I think that's what's keeping us going strong, even in a downtime, or what is considered a downtime, when otherwise, if you go back to sort of 2008, 9, or even 2015, 6, or 2017 or 18, funding had dried up pretty badly, right? But today, even though we've supposedly hit a winter, founders are managing to stitch up their deals. So I think it's a great platform, and I'm very, very happy to be here.
Awesome, thanks. I mean, there is so much talk about this funding winter, and I've been feeling a little cold since this morning, listening to that term. No, I'm good, thanks. But do you think decision-making for you as an investor has changed drastically, especially in the past 3 months? Because when I spoke to people in March, no one was talking about the funding winter. Everyone was still very gung-ho. So what do you think has changed for you personally, and what have you noticed in the ecosystem?
Yeah, look, I think the 15 million seed round valuations have come down to 5 million. So that's great for me as an investor. But let me start with your first part of your question. What has changed for me, and have I changed my decision-making dramatically? I think sure, right? If I have to look at it very honestly and candidly, we've generally been investors who've been extremely, I don't want to use the word cautious, but have done a lot of diligence around where we want to invest, how we want to invest, the founders we want to back, and we generally lean a lot towards very commercially savvy founders. I think in the last year or so, like the rest of the world, we've gotten carried away as well. And because of FOMO, fear of missing out, or momentum, or greed, fear, whatever you want to call it, we've made a few investments that we absolutely should not have, right? And so I think, fortunately, we didn't make too many of them. And so it's not going to cause a big dent or change the portfolio returns in any meaningful way. But it has given us time to now reflect on those decisions. And I think we are going back to the way we were investing, which is to be very commercially oriented. I think आजकल जो धंधा word हमारे हिंदी में इंडिया में होता है, वो ज़्यादा सुनने को मिलता है कि भाई धंधा बताओ, धंधा कहाँ है, right? So वो शब्द हमारे शब्दकोश से शायद गायब हो गया था. धंधे की बात कोई होती नहीं थी. सिर्फ ये बात होती थी आपका अगला राउंड कब होगा? When are you going to raise at 100 million? When are you going to do a 20 million round? So I'm very happy to actually see that the conversation has now shifted back to fundamentals, right? The conversations we are having these days is whose profit pool are you chasing? What will their reaction be to you attacking their profit pool? What will your gross margin be? When you jump into this market and 10 other people come in, what will the economics look like? Right? Not just about when are you going to raise the next round and how are you going to raise the next round. So I think that's very welcome. I personally thrive in environments like that. I enjoy environments like that because it goes to what I understand, which is building businesses. Raising funds and capital is not a game that I've been very good at. In my entire life, all my companies combined, personally, not in the companies I've invested in, but the companies that I've built, I've only raised about $25 million. And for that, I should be a laughing stock, right? Today, if you've not raised more than $100 million, you're not allowed to come to the party. But that's not the game I know, that's not the game I play. So I feel a lot more comfortable in this environment.
Awesome. So I think this is great advice for also aspiring angel investors. There's a lot of system one thinking, by which I mean, you meet someone, you have a great feeling, and then you say, okay, let me write you a $100,000 check. What do you feel about, a gut check versus like a more detailed diligence and then investing?
Yeah, that's a great question, right? I've often thought about it. So let's break it down, right? I think if I look at, and I've been angel investing, आपको बता देता हूँ, I wrote my first check in 2007, तो 15 साल हो गए. I didn't know at that point that it was called angel investing, right? I thought angel is something you become after you die. वो time वो lexicon ही नहीं था कि angel investment होता है. हमारे community में, I come from a बनिया community, एक दूसरे को लोग help करते थे funding के साथ, कभी उधार, कभी equity. That is what I understood, and I saw an opportunity. And I thought these guys were absolute rock stars. Or opportunity भी ऐसी थी कि it was basically a digital ad agency that they were creating. और India में तब तक बना नहीं था वो ecosystem. And in the US we could see that large digital ad agencies were coming up. So I ended up writing them a check, and I actually became the single largest shareholder of that company. Eventually we sold that company, and we did it very, very, very well. तो उस टाइम पे अगर आप मुझे पूछो कि what was the style of investment, I would have to say it was extremely structured in the way that I compared it to the US. US में बहुत सी agencies थी, India में अभी तक थी नहीं. Market was absolutely going to grow, made a lot of sense, team was fantastic. But there was also this sort of maverick style of shooting from the hip and pulling the trigger, right? As time progressed, I think there was this sense of building frameworks and theses around the space you invest in, and we did that. But at some point, I think in the last few years, it got very impulsive and instinctive in many areas. I don't know, Shruti, if you've been investing 2 years formally, you said?
Well, we are an impact investment advisory, so we evaluate deals and not necessarily write checks, but
Okay.
yes.
Okay.
And we do a very, very thorough
Yeah.
diligence, and entrepreneurs are sick by the end of it.
Right, awesome. That's great. That's the other side of the extreme. The founders who come to me are the ones who've gone to people like you before and decided to come to guys like us. But no, jokes apart, I think, so what happened in the last few years is it all got very instinctive and impulsive because, the founder would come and say, look, this is the valuation and you have 24 hours to close the deal. Otherwise, I go somewhere else. Now, if you're in the game, sure, you can decide to sit out, but it's really, really hard to sit out completely, right? Because if it's real, in our business, the cost of omission is much, much higher than the cost of commission, if you understand what I'm saying. अगर आप सिर्फ ना बोलते रहे, and many of those companies become very large and unicorns, that is very painful because every day you'll read in the media about, the next check that they've raised. But when it comes to, not investing, it's okay. I mean, investing and failing, it's okay, right? You can factor that in your returns. So I think in the last few years, it had to become instinctive, I beg your pardon, and impulsive. Otherwise, you would not be able to keep up with the speed with which people were expecting you to write checks, right? But I think over the last few months, as I've built up our team as well, earlier it was just me, cowboy, sort of deciding, suddenly waking up in the night and deciding whether we should invest here or not. But now it's a more structured approach. There are more frameworks involved. But having said all that, I think to more sharply answer your question, I think gut and instinct will always play a role. And the reason is because gut and instinct is not some carnal feeling that you have, right? It is an informed sort of sense over years of what you've been doing, right? And that's why as you keep doing something with experience, your instinct gets better. And with confidence, your instinct gets sharper, right? So I think there is a role to play for gut and instinct.
So basically, a gut check is a first level filter, and after that, you should still do like a thorough evaluation of what you're going to invest into. And you spoke a little bit about.
I'll give you a very interesting way to evaluate investments, which is actually very simple, but requires a lot of time, or some level of time. Generally speaking, you will find if you're an investor, the first time you hear of an idea or meet somebody, you get very excited. And you might write a check. My advice is, whether it's hiring people or investing, have a couple of more meetings. If your confidence grows in every meeting, you should cut a check by the third meeting. If you find that somewhere it's stumbling a little bit, you probably need to do a lot more thorough investigation and you're probably on the right track, right? That's a very simple sort of rule of thumb that we use whenever we have time, but it's not always that you have time for 3 or 4 meetings.
Great, that's great advice, thank you. And you spoke about deal-making frenzy and not wanting to miss out. So are there ones that got away and you felt like, oh, damn, I should have probably gotten in on that deal?
Yeah, I mean, look, you can't be an investor over 15 years without many having gotten away. And, the deal frenzy has only been there for the last year or so. So I don't know whether those regrets will be regrets or not. We'll only find out in the next couple of years. But if I look at my record historically, I think, Unacademy, Gaurav had approached me for the first check. And in all honesty, I just couldn't see it, right? And so I turned him down. Swiggy was actually not, I said yes, and it was the first check. Shri Harsha we had got connected. And he was only in one neighborhood in Bangalore at that point. And I actually found him. But I didn't have liquidity, right? This was very early on, and those few months, I just didn't have liquidity for whatever reason. And so that's why we are, organizing our funding activities more so now to not have those issues. ACO was another company who reached me for his first check. That one I just couldn't see, right? Again, I mean, insurance agent, and again, in my defense, if I think about it, their model that they were trying to do, which was called cover self, actually failed. Right? What came out of it as a pivot, ACO, the insurance company, is what worked. So sometimes, I think the learning there is that sometimes you just have to bet, especially when it comes to very early investing, you need to bet on the team or the founder and the general space as opposed to the specific model, right? Because they'll find a way. If the space is large and the founder is very strong, they'll pivot into something exciting.
And speaking of pivots, which one is your favorite? Like, what story really excites you?
In general, I think, speaking about pivots, I think the classic pivot, if I'm not mistaken, one of the greatest pivots in history, I would say, that I always am amazed with. I'm sure, I don't know how many of you, you've all heard of Slack, right? You know the story of Slack and the amazing pivot? I think it was Slack, and if I'm wrong, it's just because there's just too much nonsense floating around in my head, so pardon me. But I think it was Slack. They started out as a gaming company. And they spend 2 or 3 years trying to build out this gaming engine, and to build it better for internal coordination, they built Slack to solve their own problems for internal coordination because they couldn't find a tool that did it. Eventually, when it didn't work, they said, what do we have that works? And they had this epiphany that, holy shit, this is what everybody wants, right? And it went on to obviously have an exit. I don't know, it was $28 billion or $45 billion. These numbers are so them anymore. But it was in that order of magnitude they sold to Salesforce, right? And so I think that's a remarkable pivot story, right? It's just amazing team, completely different space. Think about it, right? You go from gaming to SaaS, right? But they could use a lot of the game mechanics that they understood as part of building Slack, and that's why it was all product-led growth and not really enterprise-led sales. So I think, goes to my earlier point that if there's an incredible team, they'll figure shit out, and that's a big learning for us.
And you've been talking a lot about teams. So what really excites you about a team when you meet them, and what really puts you off?
Yeah, that's a great question because we all say team. सब बोलते हैं team पे लगाओ पैसे team पे लगाओ. लेकिन team का मतलब क्या होता है? Team तो सब होती है. What are the attributes of a team? It's a good question. I'm making it up as I go along, but I'm also reaching deep within to give you a more substantive answer. I think the first thing I've already said, commercial acumen, right? The world is littered with examples of great products that are lying in a graveyard in Silicon Valley or in Bangalore, right? Great products don't necessarily build great businesses. And I've been guilty of that. Because I started my career as a product manager in the US, I've been heavily biased towards product managers. So मैं बहुत excited हो जाता था जब कोई product manager मिलता था showing me nice templates of products and this is how it'll work. But I've made my mistakes, and the best product doesn't necessarily win, and a great product doesn't necessarily make for a great business. So I think commercial acumen is extremely important. Understanding margins, understanding competitive strategy, and things like that. The other one I would say, and this is very important, because if you had to ask me one attribute that separates success from failure in entrepreneurship and building companies, I would say that's perseverance, right? If you spend 10, 15 years of your life going at something in a large enough space, in a large enough industry, you will build value even if you are somebody who tends to self-immolate or self-destruct, right? Because that's just what happens. Efforts compound just like money compounds, right? So if you stay at an industry, stay at a space, stay at a problem that is large enough, caveat being large enough, for enough time, you will compound value. And so what you want to test the team for is, are they missionary in the sense, do they really have passion for this problem? Because then they'll stay in it for the next 10, 15 years. Otherwise, they'll look for the next unicorn-making opportunity, right? And so I would say perseverance is perhaps another thing that I want to test for. And the third thing these days that I've become particularly careful about is founder chemistry and founder relationship. How long have they known each other? कि काफ़ी लोग स्पेशली पिछले 2-3 साल में ऐसे थे कि वो सिर्फ एक महीने से एक दूसरे को जानते थे, or they had met only a couple of times, right? That's a disaster, and I've seen it through experience. Founder worldviews are extremely important. Chemistry is important, of course, but chemistry will happen if the worldviews are. I'm not saying they should have the same skills. That's not good because then one of them is redundant. You want complementary skills. But worldview should be similar, right? Because then that makes for a very powerful combination.
And speaking of chemistry, what is your view on husband and wife teams? I mean, I've heard a lot of investors say, I will not touch a startup if the founders are married to each other.
Yeah, they don't want to take relationship risk. No, this is a good question, right? And it's a little. I'm conflicted, right? If I have to be honest, I did a show called Shark Tank, and my co-sharks, at least two of them, are husband and wife teams. So, there is good reason to think that husband and wife teams make for a good team, good combination to build value. If you think about Cisco, one of the first typical garage startups that created incredible value, it was a husband and wife team that started it, right? But here's my counter view on that. Because they are very rare, people tend to celebrate them more, and so you might fool yourself into believing that it's a good formula for success. But if you really want to understand, I haven't done that. What you really need to study is all the husband and wife teams that started and how many built large companies. I don't have the answer to that, but I suspect it doesn't look as rosy as the popular notion that husband and wife teams make for good value creation. So I don't know what the truth is, but would I now dismiss a team just because they're husband and wife? No.
Good, that's very helpful, thank you. And that's probably a good research project for our next set of interns as well. Uh, and I noticed, the way you evaluate a company, the way you evaluate a team stems from your own experience as an entrepreneur. And you're probably one of the first entrepreneur turned investors in the Indian ecosystem and extremely successful at being an entrepreneur and now extremely successful as an investor. And there's so many successful entrepreneurs in the Indian ecosystem today. What would be your advice to them about making the jump into becoming an investor?
Yeah, look, I mean, I have to be honest with you here. I don't think one should. I know,
Shouldn't
I know,
become
I know, I know,
investors.
I know. It just, yeah, I don't think one should really, right? And I'll tell you why. I mean, they should invest, but I'm not really sure that they should be setting up funds while they're still running a company or spending an inordinate amount of time doing it. And although my experience and my lesson says otherwise, I would still say that, and I'll explain why, right? I started at a very different time when there wasn't enough capital available for a lot of founders, and there wasn't enough competition in what I did, and the markets in what I did were very small. The opportunities weren't that large. So I had the luxury and the luck to be able to use time to my benefit. And if I wanted to do bigger things, I had no choice but to invest in other people or invest in multiple opportunities because the internet market itself was very small. So over time, I kind of learned the ropes. Today, if you are an entrepreneur having raised VC money, you're probably chasing $1 billion dream, or at least your investors are pushing you, or nobody's going to give you money unless they think that you're going to build $1 billion enterprise because that's the only way they make their money back. So when you're doing that, and with the level of competitive intensity there is today, it's really, really very hard to take meaningful time out to make meaningful angel investments. You can still do it, right? Occasionally on the weekend, friends people you have a lot of confidence in, backing them. That's fine, right? Somebody who left your company and started a company, and you have high faith in their capabilities. But to go out and make it a big part of your career is going to eat into your primary job, that of creating value for your primary investors. So that's the reason I would probably say that it's not something you should do if you've raised a lot of capital.
So if you're a busy entrepreneur, don't do it. Wait till the time is right, which is probably when you retire or have an exit. But there is so much wealth that has been created today.
Or the
that has been
competitive
created.
intensity in your business becomes less,
Yeah.
right? When you're a matured company, let's say.
Or if your co-founder can take all the load. I'm kidding, but there has been a lot of wealth that's been generated, and there are entrepreneurs who've had successful exits. There's tons of family offices, and we have Let's Venture today that's helping angel investors get on the platform, evaluate really amazing startups, and write your first check. What would be your advice to them for aspiring investors and new investors?
Yeah, look, I just want to clarify one, excuse me, thing before I answer that question. Because, I just worry that, the headline tomorrow will say that Anupam advises entrepreneurs not to invest. That's not what I'm saying, okay? I'm not saying that. I just want to make sure that's abundantly clear. All I'm saying is they shouldn't devote a meaningful amount of their time if they've raised a lot of venture capital money to go out and start evaluating startups. There are other ways to invest, which is friends, companies they know, funds, early stage funds, which I'm a big investor in, I believer in. I invest in a lot of early stage funds. Platforms like Let's Venture, where somebody's leading, doing the diligence, you don't have to do the heavy lifting. So I'm all for that, right? That, just a clarification. Now, coming to your question, in terms of Let's Venture and the platform, I opened with that, right? So you didn't even have to cue me. I think, Let's Venture and platforms such as Let's Venture, but given that Let's Venture has the lion's market share, let's just say LV, has changed the investing paradigm in India when it comes to this asset class. I think it's an asset class that was only available for the, they keep adding U's to HNI, so I don't know what it is now. HNI. But the fact is that everybody should have exposure to this asset class, because all the non-asset alpha generating asset classes like mutual funds and things like that have all become commonplace, but they don't generate alpha, right? All the alpha generating asset classes have been boxed away into alternative investment funds and are available only to UHNIs. And that's a pity, right? And I know it is ostensibly to protect the small investor from betting the entire farm on some crazy Web 3.0 CryptoKitties project. And I think that's right? That should be done. But at the same time, I think there should be a way for them to invest a little amount, let's say 5% of their investable corpus or 10%, into alternative investments so that they can have exposure to alpha generating assets, right? And I think platforms like Let's Venture democratizing this, and that's great. As regulation also matures along with these platforms, ultimately, 10 years from now, we might be looking at early stage investing like mutual funds, and it'll stop generating alpha. And that'd be a great thing, right? When it stops generating alpha, it means everybody's taking part in the upside.
Yeah, and correct me if I'm wrong, but I was reading that 95% of your investment portfolio is actually into startups. So you probably are the biggest believer in the Indian startup story today. And while it is different and honestly a little bit shocking, it is also a reminder that there are people who've been able to reap alpha, like you were saying. So it would be good to have one story of an investment that you made and that generated amazing returns.
Look, fortunately, I have a lot of stories. So I have to first be very clear. The reason I have 95% of my money in startups is because I've tried public markets and it doesn't work for me. I just keep watching the stock ticker every day, and that's not a good productive use of my time. I've tried land, and I lost money. And I said, what do I know best? Is what I asked myself. I said, okay, I understand early stage because that's what I've been doing. Where does my strength lie? Investors or founders seek me out, so I have an advantage there. And so I said, look, if I'm going to get concentrated in one area, this seems to be the right area for me. For me, that doesn't mean it's for everybody. So I think it's worked for me, but will I always remain at 95%? Probably not. Right? At some point, you have to start thinking of preservation as well. And so I think that'll probably come down on a relative basis, but I think allocation on absolute basis will probably increase. Okay, so that's settled. I have to be a little careful these days. So that's settled. Let me talk about a few stories. I already told you about interactive avenues. That was a remarkable return. Macan.com was another great return for us. We sold that company to News Corp finally. It was a company that I had built initially, but then it was getting killed by sort of our investors, and everybody decided that we should shut it down. So I actually just invested a bunch of money in it, and we got a management team, and we said, look, run it. And we sold it in 2 years for a really great, handsome return, which we eventually then sold to News Corp as part of housing and Macan and that. Then there's, of course, Ola, which, we got in at less than $1 million in valuation. But, now it looks like, wow, but wo time pe $1 million valuation was a lot. Right? We're talking about 2011. And, the founder had been to every VC, but nobody would write him a check. A very early stage. Of course, everybody knows what the valuation is today, so I'm not going to do the math for you, but it's unusual. Let's just say that. Then there's another local company called Rupeek. You guys know Rupeek? Anybody heard of Rupeek? One of the best fintech companies very few people know of. It's completely secured lending. It's basically tech-enabled gold lending. Right? They're building gold ATMs. Right? You go drop your gold and take cash. Right? So great founder, great team. Wrote him his first check. Again, same story. VCs couldn't see it. I believed in the founder. I saw 2 traditional companies doing gold lending. I felt something had to give. Turned out to be a good bet. So, yeah, these are just some of the many stories that help me sleep well at night. But I have more that keep me awake at night. Unfortunately. But that's how it goes, right? See, I always say, agar tumhari aadhi 50-60% of your companies are not failing, you are not taking enough risk. And if you're not taking enough risk, you're not generating enough return, right? So, more than half my companies have already failed, and I'm very proud of the fact.
Awesome. These are great stories. Thanks so much for sharing. But this fireside chat would not be complete without asking you a little bit about your Shark Tank experience.
Oh, yeah.
Yeah, how has that been, and how has it shaped how you look at startup opportunities now?
Yeah, I think it's actually been very rewarding, and in some ways really changed my perspective on a few things. And I'll explain what happens with founders and investors to some degree as well. As you get more and more busier, your time becomes more and more valuable. You start operating in a bit of a vacuum, in an ivory tower, you want to call it a glass cage, whatever name you want to give it. But the founder that used to sit outside somebody's office for hours, the founder used to take a black and yellow cab or a bus to get somewhere, and therefore was very connected with the average customer who you're building for is no longer that founder, right? Because now people have to get past your executive assistant to meet with you. And I think that happens with every founder and every investor. You lose touch with reality, right? Because you're trying to protect yourself from so many demands on your time. I think Shark Tank में क्या हुआ कि जो लोग आए pitch करने, वो सब sort of non-standard VC type of founders नहीं थे, right? Which is IIT, IIM, pedigreed, having access through their network somehow. These were all घर पे बैठे लोग जिन्होंने अचार का धंधा शुरू कर दिया था या साड़ी पे, और इंडिया में हर घर में ऐसा तो काम चल रहा है, right? Everybody has some जुगाड़, you know, wife कर रही है, daughter कर रही है, sister कर रही है, आदमी खुद कर रहा है, somebody is selling something from home. These were those type of founders, right? So once again, I think it connected me to the real India, जिसे हम भारत बोलते हैं हमारे fancy jargon में कि ये एक इंडिया हो गया और एक ये भारत हो गया. चलो, let's use that jargon. So it connected me to Bharat again, and it is continued क्योंकि after coming out of Shark Tank अभी we are recognized to some degree. तो जहाँ भी जाते हैं तो लोग यानी सेल्फी लेने तो आ ही जाते हैं, फोटो लेने, दो बात करने. तो हम भी बात करते हैं. I turn around and ask, भाई, where are you from? What do you do? So I think it now keeps me very grounded and connected. What is the real India? And so I think I have a better sense of the opportunities and what India wants. So I think that's very important for me personally. दूसरी बात क्या है कि आप, you know, they say this, right? And I think it's true. Who are you? There's a very interesting way to think about it. You are fundamentally the average of the 5 people that you spend the most time with. Correct? होना ही है. There is no way to be any different. So, if I spend a few weeks of my life with 6 other incredible entrepreneurs who've achieved so much in their life, right? It is amazing, right? It changes my perspective on so many other things. मैं office immediately बाहर, why aren't we doing this? Why aren't we doing that? Why aren't we thinking like that? So it ups your game. So for me, these have been the biggest 2 takeaways or transformations, whatever you want to call it. And I'm thankful for that.
Amazing. Thank you so much. It was wonderful, wonderful talking to you. You truly are a torchbearer for many aspiring entrepreneurs and also investors out there. And hope to have you back in Bangalore and at Let's Venture soon again.
Oh, thank you, Shruti, and thank you for doing this. You've, made me dig really deep as opposed to giving standard responses. So thank you for that. Questions? Or?
Yeah, we're open for questions, I suppose. Maybe a couple.
Hi, I'm Ashish Mittal.
Hi,
and
Ashish.
My company's name is YugasaBot. We do AI-enabled chatbots. And we are trying to pivot from a service-based tech company to now a product-based company. And we have actually realized that in the investors fraternity, such moving from the services side to the product side is not taken to be too much positive. And this is certainly, something really surprising for us, because I also come from the community where, burning the funds used to be abusive, probably a couple of decades back now, और अभी वो इतना frequently use किया जाता है. तो we understand कि धंधा कैसे किया जाता है, लेकिन फिर भी pivoting from a service based to a product base is not taken too much positive in the investors fraternity is something I want you to please share.
आप गलत लोगों से बात कर रहे हो यार, मुझसे बात करो. No, I'm joking. But here's the problem. And I understand it because this is exactly what I did. You can sit down. Went from a services to a product organization. When I started, we used to do IT services for other companies. क्योंकि पैसे तो कोई देता नहीं था वो टाइम, फंडिंग घर चलाना था, चूल्हा जलाना था, employees की salary भरनी थी. So that's what we used to do in the beginning, right? Then we launched the product और दोनों साथ में चलाए. But what we realized at some point, and I think VCs have understood that, कि जब तक, see, when you're a founder, when you're a startup, you cannot allocate time. कि मैं इतना टाइम सर्विसेज में लगाऊंगा, इतना टाइम प्रोडक्ट में लगाऊंगा. अगर आपका धंधा सर्विसेज से हो रहा है, आप जितना भी चाहो एलोकेशन कर लो, अल्टीमेटली जब आग वहाँ लगेगी आपको सब छोड़ के वहीं जाना पड़ेगा. यू हैव टू रन टू प्रोटेक्ट दैट बिजनेस बिकॉज दैट्स व्हाट गिविंग यू योर मनी, राइट? सो यू विल फॉलो द मनी. फॉर स्टार्टअप्स एंड फाउंडर्स, you don't know what it's going to take to build a valuable business. So you have to be there no matter what, right? You cannot pre-allocate time. And so hence, at some point, you'll have to take the decision कि value अगर real create करना, I have to shut down the services business. When you do it is the question. We did it when we felt we had enough money in the bank and we had a monetizable model where we didn't need to burn more money. Right? That time we said, get out of this right now because otherwise we'll never be able to grow this fast enough. तो कभी ना कभी आपको डिसीजन लेना ही पड़ेगा. दोनों साथ में वैल्यू क्रिएट करना इज इम्पॉसिबल इन माय व्यू.
All right. Thank you.
Okay, guys. Thanks so much.
And thanks everyone.
Thank you.